Hi, this is Kym Watson of Easy Trader. Welcome to a review of 10 misconceptions of day trading the forex markets. Now, this was brought about largely from a recent poll that we held to find out what our clients thought of day trading, etc. It became very important in terms of the reasons why some of them haven't yet tried it, although they're very keen on doing so. So I thought the best thing is to run through some of the high points, but the most important thing is really we're going to be holding a webinar on the subject and talking about day trading as a whole. So we would like you to come if you haven't already joined our trading room. This is, as I say, if you haven't joined our trading room or got our day trading CDs, come to our webinar and see what it's about. So let's have a look at these misconceptions then. Okay, so you need lots of special equipment. Now, in the older days this may have been true, but with technology, the way it's moved forward, you need very little in real terms. You need possibly a laptop, and an extra screen would do you just fine, or a PC with two screens. You really do need two screens ideally to be able to do what you want to do. It's a lot easier, but in terms of special equipment, it's just a rumor. You need to sit there all day watching your screens. Again, this is not true. In fact, you're far better off doing exactly the opposite and taking a trade, putting the orders in and walking away from the screens. It's the best bit of advice I can give any day trader is walk away from the screens once you've placed your trades and your orders. You can get rich quick. Well, of course you can, but you can also lose money quick. You can have good winners, good losers. But of course, the people that are generally saying you can get rich quick are the people that are selling courses. And reasons why you should be getting in and joining their course. Now, realistically, most people don't get rich quick trading forex, and many actually lose money. And it's all about learning how to do it properly. Yes, you can get wealthy and you can get rich if you like, but at the same time, take the word quick away. You cannot make money day trading. Often heard by those that have tried it and haven't managed to succeed. There are a high number of people that do lose money trading and day trading, and mostly it's about many other reasons. It's not the fact that you can't do it, because we can prove that you can do it. It's a case of people's psychology and their methods are just not up to the mark. One I hear a lot is you need live news feeds that are only available to professionals. Well, realistically, when news comes out, and if you're trading around news, the news is so quick, even if you've got a professional feed, which I've had in the past, it doesn't give you any advantage. The news is out there, the price has already started moving, and so often the charts would tell you everything. The news feed is handy to understand the news and whether the price action may continue, but realistically you can get good news from many sources now at very low fees. Here's one I get a lot: is you need to watch lots of currency pairs. In fact, a recent analysis I did on my own trading is predominantly 80% of my trading comes from two currency pairs, the pound dollar, the euro dollar, purely because they give the greatest volatility in the mornings when I'm trading. So I tend to stick with them. And the important thing is, as ever, is to become a master of a couple of things rather than trying to be a jack of all trades. Okay, you need a broker with very tight spreads. Now, some of you may see the spreads that Charlie trades with. I trade with very tight spreads as well. I pay costs though, and you don't always see on their headline figures any costs. Charlie's built into his trading because of the amount of volume he's trading there. But you will pay costs when you tight spreads, either directly or indirectly. Directly is I pay a cost each way on the trade, but my spreads are very, very tight. In fact, my spreads can be as low as 0.1 or even flat effectively, but mainly they all work out around about 0.9 on a euro dollar, and it's a common figure, 0.9, 1%. But the important thing is it's not about tight spreads, it's about feel, and it's also about the trade that you're in. Most people blame their broker and everything else because they've taken a bad trade and the spreads have just pipped them out. Yes, tight spreads are a benefit when you're placing stops, because if you've got the tighter the spread, you've got the less chance you've got your stop being hit. But at the same time, some brokers will have that with the tight spreads will have more volatility within their price levels, and it may still hit your spreads anyway. So it's swings and roundabouts, but tight spreads are not important. Good fills and good market execution all the way through is much more important. Okay, one of the things a lot of people suggest is that they should be trading using a demo account first. Best thing I've ever noticed about a demo account is the fact that you learn how to use that broker's trading platform. That's it. In terms of trading much beyond that, the feeds and the data you're getting is often different to live markets. So a lot of people start off on a demo account. They've got no fear of the markets because they're not going to lose any money. They start trading the real market, and of course their fear steps in. The best thing is to be trading on a live account as soon as possible, with small amounts though. The fact is you can trade with very small amounts in these days, in this day and age. And yes, you can just then gradually build the amounts up, so you just gradually get used to what you're doing. So steer clear of demo accounts from my point of view, unless you're learning how the platform works. As day traders, you'll be trading off 1 minute charts or even less, or even tick charts. It's not the case. Most of my trading, and Charlie's the same, we'll be looking around a 60-minute chart for the clues. We may take a trade off a 5-minute chart for the absolute entry, but the trades and the direction are often coming from the hourlies, 4 hourlies and dailies. So we're working with the bigger price action in the main. Never look at a 1 minute chart. 2 minute chart is the smallest I ever look at. Realistically though, 5 minutes and 15 minutes are just brilliant for day trading, and often my trades in the morning are taken from watching an hourly chart at the time. You need more winners than losers to be profitable. Now this is often what most people would expect, but it's not what your win-loss ratio is. It's your risk-reward ratios. So you can have more winners, more losers, but still be profitable than winners. And this is something that you get used to, and you have to get psychology with. In terms of if you're getting a 3 to 1 risk reward, so every time you win you get 3, and when you lose you just lose 1. If you're getting those, if you're winning only 40% of the time, overall you're going to be up in money. And this is the most important thing to know, is that you can have more losers and still be profitable, providing you're letting your winners run. Okay, so join us for a webinar on Wednesday the 10th of June at 1900 hours, 7 o'clock in the evening, British sometime that is, and we'll really go through our experiences of day trading. That's Charlie Burton, as myself, Kym Watson's experience, and we'll be talking about some of the experiences that we see in the trading room and a lot more. So we hope to see you then. Bye for now. Sorry, I should have added, you can sign up using the link on the email that you receive here. Just click on the link and it will automatically take you through to the sign up system. Alternatively, if you're watching this from the web, go to our website, go to webinars, and you'll find a link to join us on there, and just fill in your email address and you'll be sent an invitation to the webinar. That's it. Thanks for now. Bye bye.